Miss Jill Jensen. How are you doing today?
I am doing well. Thank you for having me.
Yeah, they changed my layout a little bit, so my flow's off a little bit.
It's good. A little change is always good.
Not all the time, but I didn't get a chance to mess with it too much. This is my first time. They came out with a new version of this platform, so it's they moved where things were, so it's messing with me a little bit. But enough about that. We're here to talk about you. What part of the country are you from?
I'm in Utah, just about 45 minutes south of Park City.
Park City. I went to Salt Lake in January, and it was pretty nice. It wasn't that cold, but it was pretty nice. It was a little bit cold, but not that cold.
You must have caught a good day.
I was there for like 2-3 days.
Okay.
But I was surprised how it wasn't cold, and I was outside walking. It was cold because I was walking around outside. There was no snow because they were really cleaning it up in Salt Lake, and it just felt cold.
Yeah, it gets chilly in January, but this year it's been much more mild of a winter than the previous year.
Yeah, so that's what I understood too. I definitely had to bring out my winter coat that I have, but Utah is very cold.
Where are you located?
I'm in Southern California.
Okay, then yeah, Utah's cold.
Yeah, Utah's cold. I grew up inside Chicago, so I know what cold is.
Okay.
I'm very familiar with cold. It's a distant cousin of mine that I don't see very often.
So you can handle it.
I can't handle it. You are a money raiser, Sonos Capital. That's what I have. How long are you raising capital for purchasing, or are you just raising capital in general for different type of asset classes? Let's talk a little bit about what you do and how you do it.
That's a great question. So I'm the Chief Investment Officer at Sonos Capital over all the investor relations, which means I just get to connect and talk to the accredited investors that basically just want to learn how to have their money making them money.
There you go.
And it's technically a fund. And so a lot of people that are listening are already in real estate. There's a difference between a syndication and a fund.
Absolutely.
And the syndication approach is when someone has a deal under contract, we got to go raise capital so that we can, close on the deal. Where a fund is, I'm always raising capital, whether I have a deal in front of me or not. And then it's like, okay, there's a deal that pops up. We got money in the bank to go take it down.
So the Chief Investment Officer, you're the first person I ever spoke to about that. I went to an event this past weekend, and they're like, you need to have a compliance and a investor relations. That's what they told me.
Yes.
I was just hearing about this in my ear over this past weekend in Phoenix. But Chief Investment Officer, so you are the person that gets to go take people to lunches.
I get to host the dinners. I get to be the face. I get people to run my social media accounts.
Yeah, that's always fun. Everybody wants to be the Chief Investment Officer.
Well, you can go underwrite, or you can just go hang out with cool people all day.
Oh, man. Okay, so what's your fund strategy and setup that you can speak about, since we can only speak about certain things since this is a general audience?
Right. So in general, putting money in a fund, you need to be an accredited investor. And simple terms of what an accredited investor is you either need to have a net worth $100,000 or $1 million, or you have an income each year of $200,000, or the third way to be accredited is that you and your spouse jointly in a year are bringing in $300,000. And so putting your money in a fund, there are kind of like stipulations.
Yep.
Where, like we talked about before, syndication, you could have $50,000. So with our fund, a minimum is $100,000. And how that plays out is, like I mentioned, we have a deal, we're able to take it down, someone's placing their money in a fund, and our fund is a little bit longer term than just your short fix and flip type of approach within real estate. And in a fund, ours is a 5-year span.
Wow.
So We use a lot of people that have retirement accounts where they're fine having their money sit there for 5 years. And our money multiplier is a 2x. This current deal I just took down was a mobile home park, and there was 102 units. And our business model is kind of like a fix and flip approach, where we have the land and this park is 60% occupied and 40% unoccupied. And what we're able to do is demolish some of the homes that aren't being utilized. They're kind of old. We bring in the new homes and we sell all of the homes at cost. And what we're doing is we're providing affordable housing for different communities. And my partner is really cool because he became a broker for manufactured homes, which means we can get the homes at an even bigger discount. And what that means for us is we're able to sell the houses even faster, because our goal is to just be collecting rent basically on the land, the pad itself, not the home.
You don't want ownership, because then ownership comes with problems.
It comes with more overhead. Exactly. So we could look at, let's take a single family home compared to an apartment complex compared to a mobile home. So average home right now is around $400,000 nationwide. An apartment, a 2-bedroom, 1-bathroom, average is around $2,000 to $2,500 a month. And a modular home with us, brand new, 2-bedroom, 1-bathroom, single wide, you can get for around $51,000. There are some setup costs. So out the door, you're looking at around $70K to purchase a home. And on top of that is just the monthly rent to rent the land that the house is sitting on. And that's around $500. So you're looking at someone with a mortgage that's under $2,000 compared to an apartment complex of $2,000. And the crazy thing is, a person stays in an apartment average of 2.5 years. And a mobile home, person stays 14. So just like you were saying, there's low maintenance because they own the home, low turnover because they're homeowners, and you're just cash flowing on the land.
I like that play. I like the general side of it, because you get rid of all the riffraff, which is the riffraff is the older homes, the problems. You get rid of the riffraff, and you're putting in new homes so where people want to be, because people want to be in newer homes. And then now you're collecting cash flow on the land. I think it's brilliant. I enjoy the play. I actually have a mobile home deal for you.
Oh, what a great opportunity here. Great conversation. Are we going to talk about it, or are we going to talk about it after?
We're probably going to talk about it after.
Okay.
We're going to talk about it after, because one of some of my acquisitions teams, they found a mobile home park. It's a new development, but I think it's good numbers.
Cool.
We're just looking for an assignment, which we never look for assignments.
And that's what we're looking for.
Exactly. And that's why I'm like, and you already have a fund, which means you have the capital on hand. So this is right up your alley.
That's up my alley.
Who knew? I didn't know that coming to this conversation.
Who knew? Look what happens when you take action and keep doing business every day.
Yeah. So now I have a question too, because this is where I guess it's kind of around the same thing, but can other people get access to those mobile homes for $70,000?
They cannot unless they become a broker. And so my partner went and took these random tests, became a broker for Clayton Homes, and you can. There's just a process, but we're really strategic. So there's a reason why he did that, and it's like long-term game.
It feeds the fund.
Yeah.
Product at great pricing.
Yeah. And so like our goal is not make money off of the real estate of the home, but the land.
Yeah. No, I get it. I get the model. I get the model. I understand.
Got it.
I need some mobile homes right now. I need like 18.
Well, we'll have a conversation after. Sometimes it's not what you know, but who you know.
That's right. This is why this conversation is opening up to a whole new conversation, because
we might be business partners by the end of the day.
What states are you looking for mobile homes? Let's kind of jump into there, and then we'll jump into capital raising.
Cool.
That's always a good conversation.
That's my favorite part.
Oh, yeah.
Yeah, the game of capital raising. People are like, I'm afraid to raise capital. I'm like, no, we'll get into that. So our market is the Midwest, basically the red states. And we'll take a look at anything. It never hurts, because you can find a deal, or we might be able to connect someone that we know in the industry. Right now, we're currently buying in Arizona, and then we'll be branching out to Idaho, Colorado, and we look at Alabama and Texas. So anything in the Midwest, just send it my way.
Okay. Midwest. Interesting. Okay. Let's talk about, I'm texting my acquisition guy right now, so I can have it ready. Cool. Let's talk about raising capital. So you said you like raising capital from IRAs with a 5-year hold. It's a pretty long hold that I hear of. Most people, they do like 12 to 24 months, and they're usually max I hear is 36 months. But how are you finding IRA capital, and what are those people? What are the demographics of those people?
Well, we're gonna rewind a little bit.
Okay.
Because I was the exact person you're talking about originally. I had a problem. I was the problem, and I had money in CDs, and I was like, okay, I've got quite a bit of money. This can be making me money. How do I do that? Real estate. Okay, I got to go find someone to do it. Like, I don't want to learn how. I just want to find the successful people and follow their lead. Or let me just come invest with you, and you get a piece of the pie. Just, So I was in the boat of, I started out with 6 to 12 months. I was like, let me just get my feet wet. Let's just see what this is about. And so I solved that problem. I had my money making me money. Then I ran into a second problem. Now it's taxes.
Ooh.
Because I didn't hold any assets. I was just the lender. And I was like, okay, here's another problem. Once again, I'm just going to go find the people that I can partner with and not have to figure out. I don't want to hold the assets, but how do I leverage having equity in these deals? And I became what I like to refer to as a private money partner. So I was the lender. I was getting a lower interest, but then I had equity. So then I was able to write off part of the property. And now I was like, fast forward, I skipped over single family and I jumped into the mobile home park space. And I came in contact with Sonos Capital, and they're a fund for mobile home parks. And when they broke down the numbers of what they offer investors, it was a lot higher than what I was getting with my other partners.
Oh, yeah.
And the tax advantages in mobile home parks was a game changer, because there's a lot of people that lend their money that don't necessarily hold assets. And how I help my investors avoid paying taxes is a single family home depreciates over 27 years. A mobile home park is only 15. And you can take bonus depreciation in year 1. So this park I closed on 2 weeks ago, someone that puts in $100K, simply off of taxes, they can write off 74 in the first year. A total of 122 over the 5-year span. So as a lender, you got to find also the avenues where you can like tap into the tax advantages. And so that was a big part of why I went down the avenue of mobile home parks.
So let's do some education right here. So investors are looking for 3 things. And what are 3 things they're looking for?
3 things they're looking for: the time frame. What is my time frame? What is my return, like interest?
Yep.
And what are the tax advantages?
Yeah, I was thinking cash flow, ROI, and depreciation.
Yeah. Totally.
Okay. So cash flow, ROI, and depreciation. And for different investors, they require different things. So do you offer different shares in your fund to give different advantages based off of whatever their interest is?
The bottom line is the same, but of course, depending upon how much you put in, you'll get higher returns. So I'll just throw out the simple numbers as possible.
Yeah.
Last deal, you put in 100K. Over the 5-year span, you will profit 239K on top of your $100,000 investment.
Yeah.
You put in 250K, you'll make around $598,000 on top of the 250K. Plus, you get to write off $166,000.
So you memorize that. I see you.
I pitch it every day.
Yeah. This is good. So, how are you finding these investors? Are you doing marketing through lists? Are you going through events? Are you
a little bit of all of it? I went to this convention, and it was called the Raise Fest. And when I go to these events, I go in there looking for two things. One, what type of person am I trying to hire that I can bring into my business? And number two, some of those small hinges of information that can open big doors in my business. And one thing that was said on stage was, find your avatar investor.
Mm-hmm.
And what they meant by that is, you have different people in real estate. You have your land guys, you have your mobile home parks, you got your fix and flip, and they're all good at their niche.
Mm-hmm.
Now go and find, what is your niche person that has money?
Mm-hmm.
Is it retirement accounts? Is it people that have money in CDs? Is it attorneys or doctors, or what avenue? Whole life policies, insurance, an accountant, and get really good at their language and target just that one area. Well, mine is investor groups. I'm in a lot of different real estate groups. I go to meetups. And then my second thought was, I'm just going to go bring on 10 other avatars. Instead of me raising capital, I'm just going to go find 10 people that all have their own network of people.
Mm-hmm.
And so how I've raised capital is I've brought on different people that have their avatars. So a gentleman I talked to a couple weeks ago, he's a pilot instructor.
Mm-hmm.
And he's like, look, I'm just sitting next to pilots, and I know this guy makes $300,000 on this side, and this guy over here makes $600,000. I know they're not investing because they're busy flying. Mm-hmm. So that's going to be my market. I got this other guy who's like a major fisherman, and he's like, these guys have money and I can tap into it. Okay, I'm in this golf league. They all have money. Like these random little avenues. I have a woman who helps people strictly with their self-directed IRAs. And then they're like, okay, I trusted you with that. Now what do I do with it? And so the thing about these 5-year plans is, when you're targeting people that have money that aren't in the game of real estate, they don't want to have to find a deal every 12 months. They're getting their cash flow every quarter. And then multiple times people are like, then what do I do after 5 years? I'm like, I'll have another deal. We'll worry about it when we get there.
No, I think it's the biggest thing is that passive investors like being passive, and finding a deal is what we do, and that's what we enjoy doing, and not everybody enjoys doing that.
No, they don't.
Now, are these? I didn't ask this, but are these mobile home parks long-term holds that you hold forever?
That's a really good question. And when we put money into the fund, we take down the property. Year 3, we refinance, mm-hmm. and we get our investors around 70% of their money back. By year 5, either way, our investors get their money back. And we do two things, one of two. We'll either sell it, depending on where we are in our business and what type of properties we want to buy. Mm-hmm. And number 2, we'll just refinance again and get our investors their money, and Sonos Capital could potentially hold it long term.
Mm. So this is the advantage of being a fund. The advantages of being a fund is you use other people's money and you provide great returns, but you also get the advantage of possibly keeping the asset.
Yeah, exactly.
It's amazing. No, I enjoyed I've been learning about the fund space for the last year and some change, and it's been eye opening on what you can and can't do legally.
Yes, have a good attorney and find someone who wants to pay all those legal fees.
Yeah. I know. Let's talk about disclosures. I know you're going to enjoy this.
Oh no, we'll keep it basic.
We'll keep it basic. How important is disclosing in your business since you are a CIO?
In which regards of disclosing?
Disclosures in general.
So we keep things, we have like an investor portal. Are you talking about that type of keeping things like secure on the back end of investors? Is that what we're talking about?
No, I'm talking about like just through your PPM and all that other stuff is disclosing the good, the bad, the ugly, and what could and can happen and what.
Yeah. Oh, okay. So like in regards to what can and can't happen, like one thing that's helped me raising capital is how we're acquiring these parks, and the benefits of some of these things is it is a high demand for affordable housing.
Yeah.
Okay, which means low risk type of properties. And so some of the things you have to disclose are like, okay, where's the money going and what are you using the money for? So being able to like break it down. I raised $2 million. I'm disclosing how we're using your funds.
Yeah.
This is the numbers, the breakdowns, and helping them understand how a fund works over just acquiring a property. And legally, you're not just emailing an LLC back and forth, and people are signing a document and you're all on the same business, but having shares like within the fund itself.
Are you educating a lot of people on that? Because are your investors familiar with funds at all?
That is also a good question because you get both sides.
Okay.
When you post on social media or LinkedIn and you talk about different avenues, a lot of people have money that don't know how to invest. So it's very basic conversation. And that's why I feel like I'm good at raising capital, because I teach people how to have the conversation with a potential investor. And here's the trick. Are you ready to raise a lot of money?
Yes.
This is it. It's this simple. All you have to do is overcome the potential investor's story that they're telling themselves. It's not about your agenda and it's not about your numbers. It's all about what's going on the other side of the camera or on the other side of the table. Example, I raised capital in 48 hours on 2 different people, and they each invested $100,000. And when I pitched them, completely different approaches. First gentleman, he's done over 10 deals, and he understands the terminology. Basically, how much do you need? What kind of taxes? When's my return? What's your process? And how long do you need it? Like basic information. How secure is the deal? Mm-hmm. Where another woman reached out and she's like, I have this whole life policy on my husband. And you mentioned you can use the cash value account to invest. Mm-hmm. Well, I'm not going to just throw out an IRR and rate of returns because she doesn't know what that is. It's, hey, I was in the same boat. I understand we just need to get your money making you money. I'm basically the guide. Let me show you how it works. Here's the security. Here's how you sign the documents. Like very basic, and just helping her feel secure. Okay, I trust this person. I know exactly what's happening when. She's going to send me quarterly updates. I have multiple people's contact information. I have testimonials from people that have invested with her, where previous guy, he didn't need that testimonial. Just what are the numbers and let me see the underwriting.
Gotcha. No, I think it's very, very important. You have to gauge who you're talking to, and it's a sales position. It really is, but it's a sale that people want to buy.
People don't want to be sold, but you're exactly right. People want to buy.
People want to buy.
They also don't want FOMO and the fear of missing out.
Mm-hmm.
So it's also knowing how to create that urgency at the very end of your pitch. You might be really good at explaining, hey, I have this deal. This is how we're going to develop this land. Are you interested? Or you're like, okay, I'm just following up, waiting for that answer. Where on my end, how I create that urgency is once I explain, go through the pitch deck, I use the same lines. And I say, let me just show you how it works. And I explain and I create that picture in their head, the exact steps of what comes next and what's going to happen. Okay, here's the document. This is how you're going to sign it. Here's where you upload your accreditation form. This is how you wire your funds. And then after you wire, you're going to get another email. I'm going to send you updates. And then this is the tipping point. I'm going to send you this information. Here's my website. Take a look at it for 24 hours. Send me all your hard questions. But I need an answer within 48 hours because I need to go finish raising the capital. So it's like, okay, I'm giving you time. I'm not trying to sell you, but I don't really need your money.
Mm-hmm.
I got to go. The FOMO.
I have a certain allocation of time I can spend with you, and that's it.
Yeah, I got to go. Are you coming? Let's go.
Okay. No, I like the simplicity of it. A lot of people struggle with raising money, and I think it's paramount to your business and business growth, especially in real estate. And I've been very, very much pitching from the thing, not necessarily pitching out for money, but like, hey, if you want to go and you want to go big in real estate, you need to start raising money, and you need to be comfortable doing it, and you need to learn how to do it the right ways. That way, you can leverage and create your own wealth in the future. And it's going to take time, and it's going to be painful at first, but
totally. And it's literally right between your eyes. The hardest part is the mindset behind it.
Yeah.
And I tell my capital raisers, I'm like, you're doing people a disservice by not sharing, because guess what? You're only helping them make more money.
Yeah.
When it comes down to it, you're serving someone who had a problem like myself, where I'm like, I just need someone who knows what they're doing and they can leverage my money.
Mm-hmm. Yeah, 100%. Now, how many money raisers do you have underneath you that help raise money for you?
I currently have 5.
5. Okay.
And I'll be bringing 5 more on by the end of the year.
Wow. Can you say what your money raising goal is?
$2 million a month.
$2 million a month.
On my own. Wow. And I want them to get to the point of where they're at least bringing in $1 million a month.
Wow.
But it's all just reverse engineering. It sounds like a big number until you break it down. And I'm like, okay, $1 million a month, that's only 2 people at $500,000. Or that's 4 people at $250K.
Mm-hmm.
Or you break it down again, $100,000. Okay, how do I find a person that has $250,000? Okay, retirement accounts. How do I target more people? How do I get in front of other people? Okay, I'm going to be on a podcast once a week. And now I'm in front of someone else's audience every week. Mm-hmm. I host investor dinners once a month in my area. I have someone who sends out mailers, and they're all letters to potential accredited investors. I go to different meetups. I leverage social media. And now it's like, okay, if I talk to so many people during the day, I've targeted the right people that I know have the right amount of funds. Then it's just a matter of putting in the reps and getting on the phone.
Do you ever target any other like family offices or higher net worth entities as well?
One of the people that I recently brought on, that's going to be his main focus is family offices. So I won't necessarily, but I found the person who will.
Okay. Touche. All right.
In a roundabout way, yeah. They brought me on. I'm like, so how much do you want me to raise? Little did they know, I'm like, I'm just going to go find people to do it for me.
I mean, that's the you are the CIO, so it's your job to delegate.
Yeah. I'd rather have a small slice of a big pie than a big business by myself.
Yeah. So how long you been with Sonos since you started?
This is my first year with them. I've been in real estate, and I started purchasing my own mobile home parks in 23 and then joined forces with Sonos Capital just this last year.
Okay. Very interesting. Yeah, raising capital it's very rewarding in its own little right. Yeah. I get calls directly sometimes, and it's just, hey, this is interesting. Like, how much you got?
Right. So people are like afraid to talk about money. Like, you don't ask people how much money they have. And I'm like, that's like the first question I ask. I'm like, how much money do you have? Let's see what we can do with it.
Yeah, me and my partner, we have a silent competition that we don't talk about, and it's probably the first time I talk about it. But we have a money raising competition between each other of who can raise the most capital. So sometimes he'll I raise money for this, and like, oh, we need to raise money for this. All right, let me get to work.
Totally. I have a funny story. My business partner, we were at 1.9 million, and I was like, we thought we were at the 2 million mark. And I was like, oh, wait, I just calculated, we're $100,000 short. And I was like, do you want to bet on this? Who can raise it faster? And he's like, yes. And he had a call like the following week with someone. And so he thought he had it in the bag. And then all of a sudden he gets an email pop up that said, new investor. He's like, you're working on a Sunday? I'm like, desperate times calls for desperate measures.
And I won, and you owe me lunch.
He owes me a lot more than that. The bet was more expensive than lunch.
Oh, okay. Well, that's between you and the other party.
Let's just say I wanted a really expensive purse.
Oh, okay. All right. I can see that. Nah, it's definitely interesting, and a lot of people have more money than you think they do. So it's there's more money out there than there's opportunities. So you just gotta have the conversation, and you're helping them put that money to work. Because if not, it's just sitting there.
You're totally right, and that's why I'm like, people get afraid. I'm like, you're literally just helping that person, and you're not selling them on anything. If you have a good deal and an opportunity, all it is knowing how to communicate the deal to whatever their story is, and taking care of, do they have a tax problem? Do they need cash flow? Or are they looking for like long-term wealth?
Mm-hmm. Absolutely. No, it's a beautiful thing. I've recently, like I said, I've kind of delved into raising money, and it's been a very interesting journey. I'm excited for it. I know the leverage we can give our money lenders and the leverage we can give ourselves with buying good assets. So it's a win-win scenario for everybody involved, and it wasn't necessarily on my radar until I started doing it, but it's fun.
Yeah, for sure. I agree.
It's fun. What has been your craziest experience raising money?
My crazy experience?
You have a crazy story?
No, not that I can think of.
Like you went to go raise money and you tripped and fell on somebody, and somebody's like, I have $100,000 for you.
They're just throwing money at me. No, I'm just surprised. Like, if people go to my social media, it's nothing extravagant, and I don't have a crazy amount of followers. When I just started posting short reels from my phone of what I was doing, people that I haven't talked to in 15 years were like, hey, how do I do this? Like, put yourself out there and tell people what you're doing, and you'll be surprised who comes out of the woodworks to lend you money.
That's very true. I had one of my lenders I have not seen for 25 years. and he put in like $500,000 on a deal. Yeah, they definitely come out of the woodworks.
Did you even know he was someone with $500,000? Like,
I knew he had it, but I didn't know if he wanted to invest it with me.
Yeah.
Like, I don't know. Because he's active. He's an active investor. So I didn't think most active investors don't invest with other people because they're active.
Yeah.
So it was an epiphany where he's active, and I guess when you're active so long, you turn into a passive eventually. Yes. And that's what it was. That's where he was in his transition point into passive investing.
And I learned that after asking enough people. People are like, how did you raise capital? And I said, I'm really good at just connecting with people. And I ask 2 questions. I say, what do you have in your business? And what do you need? Mm-hmm. And then I'm going to tell you what I have and what I need. And then let's see if we can collaborate. So I just kept track of every person that told me that they had money. So then when I got into Sonos Capital, I just went through my list of people that I've talked to over the last 2 years.
That's it.
Yeah, and most of them said, like, long term, I'm like, what do you ultimately want to do? And they just say, I want my money making me money. I just want passive income.
Say less.
Mm-hmm.
Let's talk. What is a quote that is yours or somebody else's that you resonate with?
First, I don't know if it's necessarily a quote, but it's the book, Who Not How. Mm-hmm. Figuring out who, not necessarily how to do something. And then there's one more line. Mm. It's not who you know, but who knows you.
Ooh.
Oh, I had someone reach out yesterday to my business partner and I, and it said, like, the referral, because they log on through our website, it automatically sets up an appointment. And it said referred by Jill. And I'm like, I don't know this guy, but it has my name. And he's like, I was like, did we talk? And I just don't remember. He's like, no, you have no idea who I am, but I know who you are. And I was like, oh, it's working. Something's working.
You don't know. I just dropped my mic. You don't know who's watching. You don't know who's watching and what they have available, but there's a lot of people watching you, especially if you're very public on social media, and you just got to do it and get uncomfortable doing it, or get comfortable doing it in general, and people come around. And it might take 6 months, it may take a year, it may take 2 years, it may take a day, who knows? But
yeah, it's one of those things. It's kind of like you're going along, it's a straight line, and then all of a sudden it just takes off. Mm-hmm. But what if you stopped the day before it really started to take off? Or that one big time investor that you came in contact with?
Absolutely.
Or you talked to the old lady and you told her what you do and she has a rich grandson. Just saying, you never know.
So one thing I'll say to this is you consistently show up and people will show up too.
Totally.
Yes.
I like that.
If you consistently show up, people will show up too. And it's just by you being there consistent, like, okay, she's serious about this. He's serious about this. I like serious people.
You're planting seeds.
Yeah.
And then they're like, okay, I've watched you enough. I've binge watched you on YouTube. Where do I call and ask you questions?
Absolutely. Absolutely. Well, I think this has been a great episode. I appreciate you coming on. I learned some stuff. Like, this is why I love it. Like, yes, in the beginning, like, what's your audience? And I'm like, it's not even about the audience. It's for me. I'm going to learn something too.
That's great.
The audience is they're just the added bonus, but this is really for me, for everybody listening.
Cool. I like it. You're just connecting.
I'm just connecting.
You're just showing up and taking action.
That's it. I am here taking action, and this will be episode like 525 or something like that.
Okay. Can I tell you a statistic then?
Yes, hit me.
Average podcast, I want to say it was 3.9 million podcasts are started every year. Mm-hmm. 20% make it past episode 3. 1% of that make it past episode 20. So you are far beyond the 1% club. Yes. You made it past episode 3, and that was a really big deal, actually.
Yeah, I'm hitting episode, like every 100 I hit, I'm like, did I really do another 100? Yeah. Did I like I've been doing this for 3 years now.
Way to show up.
3 years. Yes. And it's been okay, so I did it initially, and this is for everybody here listening. I did it initially because I felt like I needed to. And then like after like episode 50 to like 75, I was like, this is kind of fun. Just talk to random strangers for an hour and see what happens.
Right. You never know what you're going to get. That's the exciting part about my job. It's like every person's different. It's not the same thing every day. You never know the conversation, the connections, like the type of business I've done outside of real estate just by talking to someone. I'm like, what have you done the last 30 years in your career?
I don't like literally. I have no idea. Like, I don't know. Like people I kind of people show up on my calendar and I'm like, I think somebody did a group message with us and like, yeah. Have a conversation with it. Let's do it.
Yeah. Well, because that's one thing I ask. I ask at the end, people are like, do you need anything? And I'm like, yeah, can you refer me to one person that has a podcast?
Ooh.
If you know someone that has a podcast that you're like, oh, you would resonate with so-and-so or their audience or their podcast.
There you go. You ask for referrals. This is a good one I learned this past weekend, and I'm going to spill the sauce. If you're still listening to this episode, you get a little sauce here. When you're raising money and you raise money successfully from a person, you ask them if they know anybody else that wants to invest. Hands
down. Every person's an investor, whether it's them or someone they know.
Absolutely. So 100%. Even if you don't sell them, they might know somebody and you can get a referral and how easy are referrals to convert?
You know how many people are like, hey, can my sister get in on this deal too? Hey, I was telling my brother about this, my best friend. Like when they're excited about something, and here's the other thing, your reputation's on the line. Mm-hmm. So if a deal goes south, who do they look at? You. Mm-hmm. But if a deal goes upside and they make money, they tell people.
Mm-hmm. Capital knows capital.
Mm-hmm.
Absolutely. Where can people find you online? Because sonoscapital.com. Where can they reach out to you directly? I know you're online. You probably just Google Jill.
You can look me up on Instagram. You want to know my tag on Instagram?
What's your tag on Instagram? Hit me.
I am a Jillionaire.
Oh, look at that. Did you change your name?
It was Jill Jensen, and then it changed a while ago. You can still find it under Jill Jensen, though.
Cajillionaire. No, I'm just kidding.
That one would be good. I think it was probably taken.
Jillionaire. That's your Instagram handle.
I am a Jillionaire is what it is.
All right. There you go. I like that because it makes it easy to find, It kind of fits what you're doing now, and it is what it is. It's good. Yeah. So go check out Jillionaire on Instagram. Reach out to her. Sonos Capital if you want to invest into mobile home parks, which I love affordable housing, which I did not mention, but affordable housing is my all-in-all goal too. And I think it's a great resource because I think affordable housing is underutilized and everybody wants to make that HGTV home, but who's providing affordable housing?
100%.
There you go. For everybody here, go like, share, subscribe. We'll see you in the next episode. Thanks for tuning in. We'll see you next time. Thank you, Jill. Have a great day.
See ya.